Hey everyone! Welcome back to our channel. If you're new here, I'm your name, and today we're diving into the exciting world of venture capital investments. Whether you're an aspiring entrepreneur, an investor, or just curious about how startups get their funding, you're in the right place. So, let's unlock the secrets behind venture capital and see how it fuels innovation and growth in our economy. But first, have you ever wondered how a small startup can go from a simple idea to a billion-dollar company? What's the magic behind that? The answer often lies in venture capital. So, let's break down how venture capital investments work. Venture capital, or VC for short, is a type of private equity financing that gives startups and small businesses access to capital in exchange for equity or ownership in the company. This funding usually comes from venture capital firms or wealthy individuals, known as venture capitalists, who are looking to invest in high-growth potential companies. Let's break it down in two stages. Most venture capital investments happen in several rounds. First, the seed stage. This is where it all starts. Entrepreneurs often bootstrap their businesses initially, but once they need more capital to grow, they look for seed funding. This can come from friends, family, or angel investors. For example, consider a tech startup that needs $500,000 to develop its first product. This initial funding is crucial for getting off the ground. Next, Series A. Once a startup has a viable product and some traction, they may seek series of funding, typically ranging from $2 million to $15 million. This funding helps them scale their operations. For instance, a social media app that has gained a user base might seek Series A to improve its technology and marketing. Then, Series B. At this stage, the company is more established and is looking for larger investments, generally between $10 million and $30 million. This funding is used for expansion into new markets or broadening product lines. A classic example is Airbnb, which raised $112 million in Series B funding in 2010 to expand its services. After Series B, startups may go on to Series C and beyond, with funding rounds often reaching hundreds of millions. Companies like Uber and SpaceX have gone through multiple rounds as they scale globally. Now, let's look at some data. According to the National Venture Capital Association, venture capital investments in the US reached over $130 billion in 2021, a significant increase from previous years. This surge highlights how VCs are eager to invest in innovative ideas, especially in sectors like technology, healthcare, and fintech. So, what do venture capitalists look for when deciding where to invest? Here are a few key factors. First, the team. Investors often say they invest in people, not just ideas. A strong, passionate team with a track record can significantly increase a startup's chances of success. Second, market opportunity. VCs want to see a large addressable market. If a startup is solving a problem that affects millions, it's more likely to attract investment. Third, scalability. Investors look for business models that can scale quickly. A company that can double its revenue without doubling its costs is particularly attractive. Fourth, exit strategy. VCs are ultimately looking for a return on their investment. They consider how and when they might exit, whether through an acquisition, IPO, or another method. However, it's important to note that venture capital investments come with risks. Many startups fail, and venture capitalists understand that they won't hit on every investment. It's common for VCs to invest in several startups, knowing that a few will yield significant returns that can cover their losses. To wrap up, venture capital plays a crucial role in turning innovative ideas into successful companies. By providing necessary funding and support, VCs help entrepreneurs navigate the challenging landscape of building a business. If you're thinking about starting a venture or just want to learn more, understanding VC dynamics is vital. If you found this video helpful, please give it a thumbs up and share it with someone who might benefit from it. Don't forget to subscribe and hit that notification bell for more exciting content on entrepreneurship and investing. Have questions or topics you'd like us to cover next? Leave a comment below. Thanks for watching, and see you in the next video.